Steve, I don't even know where to start. What's been the thing that's been the most interesting to you, given what we've seen over the past 2 weeks now?
Well, look, I think the realization that this is a global shock, that it is not contained, that following the numbers, 100,000 people, it's 85 countries, it's global, and just coming to the realization that governments, people will adjust, that there will be a significant economic shock. It's not the economy is overgrown, there's not excessive production, it's not a business cycle collapse, but a true global shock where there isn't much diversification, right? You don't get to regionally diversify, you don't take your vacation in another part of the world, you stop the vacation. So I think this impact, again, is still just something that investors are coming to grips with, and they'll see more, the public, as the public understands this. Again, it's not going to be the Spanish flu, but it is going to be a global shock.
You know, it's interesting to me because it wasn't so long ago, over the past couple of years, when we thought the global economic shock was going to come from the trade tensions between the United States and China. And even that, I mean, the two world's biggest economies.
Which has already seemed unpredictable.
Correct. Right. But the two biggest economies in the world are going to battle with each other. The world economy hangs in the balance, yet markets in developed countries still hit, some cases, historic highs or multi-year highs. We thought that was going to be the big black swan.
Right. Well, there was lots of good
worse
beneath the surface. There's an underlying health, right? And again, ironic in the face of a health threat. But the economy itself, right, did not produce true excesses that had to be unwound. We don't have high inflation. We don't have incredibly high debt burdens. We don't have overgrown industries. And so there's no collapse here that was going to happen naturally. Very fortunately, despite the length of the economic cycle, it hasn't developed the kinds of boom characteristics that end up in a bust where everything goes down for a full year. This, again, is like a big natural disaster. But again, I think we've been emphasizing, and again, if you look at markets and why they are this way, right, that there is a true global shock and you want an asset allocation and you want a perspective on this, right, that's going to take that into account, that there are going to be very significant disruptions. We think, for example, world GDP, global GDP, won't really grow in the whole first half of the year, and it'll move from country to country where the impact would be. China is probably overly disrupted and may rebound a bit, and the United States will have some impact in the second quarter.